Hey guys, welcome back to the weekly watch list where we go over all the levels and setups that we're looking at going into this week and going into Monday morning as well. Obviously, this is Christmas week. It's the last trading week of the year. So let's go out strong and finish it smart. So that's what I'm here to do, is showcase to you guys my opinion on what we should be doing this week, as well as earnings and news alongside the setup. So getting right into the news, earnings wise, we only have two companies on Monday that are irrelevant to what we do, so I'm not going to make note of that. However, news though, we do have quite a bit here. Going into Monday at 10 a.m., we do have CB Consumer Confidence. Tuesday, we have core durable goods orders at 8:30 a.m., and then new home sales and restaurant manufacturing index at 10 a.m. Obviously, with that being Christmas Eve. I'm not sure the effects. I think it does cause the market to close early. It is a short day Tuesday and obviously closed Wednesday. So no news, nothing of course. Thursday, we don't have anything other than unemployment claims at 8:30 and crude oil inventories at 11 a.m. And then on Friday, we have at 8:30 good trades balance, prelim wholesale inventories, and 10:30 a.m. we have natural gas shortage. Very, very, very short week with news, obviously, it being earnings week, being Christmas week and the last week of the trading year. It's going to be an interesting week, especially after the way in which the market's been moving. As you can see, just right off the bat, it's shocking how to see the sell-off that we had last Thursday evening, throughout Thursday. Really, just crazy. The crazy sell-off that we got, no one really expected. That kind of crash that happened, the breakdown, and now the complete, like almost an entire engulfment and recovery. We've got structured up here with a pretty notable bull flag actually development here. If you just go down to any smaller time period, this is a pretty decent looking bull flag structured up. But regardless, we're setting up, in my eyes, for upside sentiment this week if we can see continuation of the rallying and recovery rally here. Really, honestly, levels this week are going to be an interesting point to be made. I think that the recent high is 6,055, I believe it was. It's going to be something to see to break. I think that's going to be an area of resistance, rejection, or consolidation more than likely than anything. The highest probable occurrence here, in my eyes, is definitely going to be the consolidation factor. If we struggle to break this, and we might just consolidate, it being the final week and final month of the year. Institutions and big liquidity is not really going to probably be looking to see a whole lot this week. Likely, you never know, but they might want to be. They already probably mostly closed their books out and are looking to come into the new year fresh. So we're probably not going to see a major amount of movement, but if we do, it's like I said, it's either going to be an upside crack through 6,050 into the 6,060, 6,068.50, and the uptrend structure here, or we're going to see basically, I think, an ascending pennant, ascending wedge structured up development here, and going into the year here, then we'll see the breakdown and breakup of that structure. So like I said, just 6,050, 6,060, 6,068.50. And those are really most significant levels. If you were to look at downside potentially, we could be identifying 5,987.50. Something of that, that area, because that local support there, nothing really significant, crazy there. Any other area of leveling I would put there would be maybe 5,971.75, but that's about it for the most part over on ES for futures. Really similar story here over on NQ. We really just have the same kind of structure here. It's not as strong, NQ, with its bull flag, as it is on ES with futures, but it is still there. It's present. It's very similar. But you can see that pretty notably there over the 5-minute, just as ES. Again, levels here going to be similar in the structurement of the rejection of the high pivots here at 21,812. You could say even the core psychological level here of 21,850 as well. That being an area of mild rejection, what have you, but it is a psychological level. 21,900 as well being a next level to kind of consider there. That's basically what we're looking at this week. Really upside wise. So 21,812, 25, 21,850, and 21,908. Those are going to be your upside structures. And then similarly, like we have over on ES as well, we're going to be looking at 21,512.50, some recent support there. If you want to go even deeper on that, which I don't see the point, because I don't think we're going to be getting any downside this week based off the structuring here. But if we were, 21,439.75 is another level of local support as well. Going into the watch list this week, I have personally 5 watches. I do have Tesla, Meta as the mains. And then I do have Google, AMD, and Apple as sides. So I'm going to cover the mains, and then I'm going to briefly review the sides, as I'm not really honestly even going to probably take any of those. And I'm going to go into that a little bit at the end of the video as a finalizing note for the year, and how I'm going about this week personally, because I think it needs to be said about the riskiness and the importance of having proper risk management and discipline in your system and sizing this week, because this can really, this week, along with this month, has been a very difficult price action month, like most Decembers are with price action movement. So we'll go into that more at the end of the video. But starting with Tesla, personally, this is a little tricky. This was a hard one for me to kind of really clarify where I was looking at entry on this. Specifically, I really spent some time identifying how I wanted to take this position. I did like 420 bit. It is already broken it several times, so I personally think I'm going to be staying away from 420, but I do like that local support area of 418.45. That's actually pretty clean looking, pretty sexy. I probably would be looking at 418 as the level more than anything. The next level I would be looking at would be like a 415 breakdown through that area as a key level to break. And then I would likely be looking at 410 as well. That's probably my number one pick on this. What makes it an A plus would be the 410 support level, especially a crack and hold below with notable selling pressure to the downside through the 410 level. So that's really going to be how I'm looking at Tesla. Like I said, so 415 area or 418 as the initial potential trade, depending on how it approaches. I really, like I said, I need to see this kind of structure up more. I don't think it's really set up really that well yet. If we just kind of hover around and consolidate, I probably be looking to skip 418.45. I don't want to see just consolidation and hesitation and just kind of like choppiness pre-market coming into tomorrow morning. I'd like to see a bit of a higher pop, and then maybe we coming off open, maybe around 423, somewhere in that range, and we're then crack below, start to pull down, and somewhere around like 9:40 to 10 o'clock, maybe even past 10 o'clock, 10:30 range, that setup approaches, and it can really get some clean, readable action there. Not something so close to price open where it's a little bit difficult to gauge that, right? So that's going to be the main watch on Tesla. I also have upside Tesla, but that's going to be far, far away. I just was going to make a quick note at 445 being my first potential area of looking at to take a position there at that level psychologically. Targets on that would honestly just be basically local areas of support, resistance, what have you, so 445 being here, maybe look at the local high to target there would be pretty good. We do have an uptrend, obviously, nothing really crazy, but something to still make note of. But like I said, this is so far that I don't want to waste any time on it. 447 is target. That's about all there is to it. So like I said, I don't want to waste too much time. That's not an A plus setup either to me. That's, as of right now, it's more so like a B minus, C plus at best. Looking at Meta, however, I do like Meta at the 580 downside level. I think that we had a pretty heavy bounce there, showcasing a pretty deep level of orders and a pretty notable wall there to be recognized here on Meta. I'm sure you could even see if you had the recording from Friday that there is one there, pretty notable at the 580 rejection point. I personally, like I said, really like this here. Targets on this would be 579 as initial target. Probably be out of most of my position off the whole thing because of this 1 minute trend we have here. It's sorry, not 1 minute, 5 minute trend. It's not something to play around. Second target probably be 578.46 at my next level of support I have there. And then likely that would be where I'm at in my full position. I personally don't like to hold Meta because it just doesn't typically have almost any follow through, especially here in the month of December this year. Follow through has been one of the lowest probable occurrences that I've noted from my backtesting and journaling. So I personally am not looking for almost any follow through on any trades this month at all. Just strictly scalping and taking mainly the second test of things. So if this comes off open, I'm going to be looking to get, if you want to argue, a early entry, so to speak. But for me, the earlier, in a sense, near open with the right momentum read and identifying it correctly, the safer in a sense as of right now because of the amount of rejections we've been getting this entire month and lack of follow-throughs. And like I said, this has to do with the indecisiveness of the election going on right now and the lack of having the new presidential elect in till I believe January 23rd. So this is going to be a time to be very cautious. Again, I'll make note of that more at the end of the video. But that's really it. 580, 579, 578.46. Now my sides, again, I'm just going to make a quick note of these. Google, I do like the structure up here at 193. It's starting to set up pretty nicely here at the kind of flat top, triple top, structured up development here. The issue is here, though, however, that Google is very, very close here. And I'm probably going to not be able to cash this because it'll probably have already broken. And if that is the case, I wouldn't honestly personally be opposed to this only on Monday to Wednesday. If we get into Thursday, Friday range, I'm probably going to be skipping this completely. There's no reason for me to take this risk with this being Google. But if we do get there on this time, I would be looking at like 195, that psychological level, and I kind of structuring up to kind of maybe approach that, maybe even potentially even buy open tomorrow, and that be the actual setup at 195 on Google. Again, there is this 1 minute trend here, or sorry, 5 minute trend that is kind of notable. No other notable trends on this one that I've found at all personally. So just be aware of the 5 minute trend as long as it's still there in the morning. And that's going to be it really. 193 break into 194. Probably looking for only about a 50-cent scalp. And 195, likewise 195.50. I'm not looking for much. It's Google, right? It's not Meta. It's not Tesla. AMD having a lot of failure to have follow through lately, and I'm personally, and it's also rejected many times on its original on its first test. So I'm looking to only take this on the retest, and I'm only looking at downside currently because of the weakness it's been showcasing over the last basically several months now. It's just showcasing a pretty notable sell off on its valuations and the share value. So personally, I'm not really interested in upside setups here, especially that going into previously tried price action. I'll be looking to take this around the 515 area, and even with an early entry around the 516 break. But it really just depends again on how we structure up here, and if we can form a nice bull flag here, that would be great. If this has the right divergence, and need to see notable divergence with AMD. AMD does not do that well. It structures very poorly, and so that's something I have to see is proper selling pressure divergence and sell-off pressure here for sure. And then my last watch list that's going to be on my side is going to be Apple. It is my side because it is Apple, right? It's a slower mover. And we're also really close here at the 255.57 level being the actual level I'm looking at. Going into 256. That's basically kind of like the target on this. Again, this is really slow. So for to have all the factors moving correctly on this stock, it's really asking a lot to see 256 even. But that's really what I got to see in order to have a valid risk to reward on this given underlying. Because otherwise it's just not going to make any sense. I mean, even holding a 256 with how I'd stop out on this, it'd probably be about a 2-to-1 risk to reward, maybe 3-to-1. A nice 40-cent, 50-cent break here through 256, maybe catching a 20-cent break, 15 cents total, 70-cent move. Then that's a reasonable risk to reward of a 20-cent stop, 30-cent stop to the potential 60 to 70-cent move. And so that's pretty overall valid, but we just got to see the structure up right, because I just can't really see myself taking this if it's just like a straight, it does some weird consolidation, lack of, divergent movement here. It's just going to be an interesting one to watch. And like I said, it's not something I'm heavily interested in. It's had some hesitation here at 255.57, but its strength has been pretty significant. So it's going to be right there with Tesla and Meta coming in Monday. If Google's not right there with them. Because it might just not set up correctly. It might not be ready. It might not be there. It might be far. It might reject. But Apple just seems to be one of the strongest on my watch list right now, next to, my other companies that I'm looking at setup-wise. So this is going to be one of those divergent positive rally plays that I'm looking at overall. So overall, guys, that's going to be the watch list this week. Again, I wanted to conclude with the note. I know it's a little bit longer one, a few minutes longer, of a watch list. I want to conclude with the point of that this is the last week of the year. This is the last month. We are in the election period time of transition, and this month has been a great showcasing of it. We've had a very poor demonstration of price action this month with lack of follow through, lack of continuation. A lot of setups just not panning out as they should. When everything's going in their favor, stocks have divergence against the market and weakness rallying or selling off. We just have not seen what should happen. Unexpected bouts of volume have been stepping in. And liquidity where they shouldn't be, and it's just an invalid poor price action, and that's just what's happening in these months of December typically on a year-to-year basis. Last December was a bit of an exception. We had a very good price action. December for sure last year, I recall, but this year is one of those typical December price actions where you have to be very cautious. I personally have scaled down to like a quarter of my size. Reason why I haven't been posting much is because of that. There's just not any great setups having great follow through, 10%, 12% returns. Stopping out, a couple times here and there throughout the month, just not getting the greatest overall month and follow throughs and great setups to showcase proper trading. So this is just one of those months where I'm sitting here looking and reading the data and the charts more than anything than focusing on growing the account, because this month is more just a capital preservation month in my eyes. And I think all my newer traders should focus on that as well, of being break even and capital preservation, because at the end of the day, That's really what you should be focusing on, not taking profits. Trying to grow the account nonstop. Is focusing on capital preservation, meaning taking only the highest quality setups when they've tested and retested and set up correctly in order to follow your system and your guidelines, your rule set, and become a profitable trader. Because if you do focus on those things, you will become profitable and you will grow the account. All right, so play it safe, size smart this week. If anything, guys, I would just size down to a size that's almost disaffecting to your account. And I would just sit here and learn. Irrelevant to how high quality of a setup is, I would just sit here and go in with one contract maybe, or even stay cash this week, because this is going to be, in my eyes, probably one of the riskiest potential weeks of the year, with just the lack of decisiveness, the weirdness going on in the rallying here. This is why I have this up, of the market, and inconciseness of where it wants to go and what it wants to do and what the institutions are doing with their books, and the real liquidity, what's its choices here, what's it's trying to do. So just be smart this week, guys, and let's end the year strong. And that could very well mean just not taking any single trade this entire week. So just keep it in mind. Whatever it takes to win means whatever it takes to win. Not being green, not being red. Whatever it takes to be a successful trader in the long term. We're here to stay. We're here to make this a career. We're here to win and do the best we can at what we do. All right, guys. I hope you have a great one. We had killed it this year. We did a great year this year. And let's just keep it going next year, rolling into next year, and let's double it. Let's triple it back, and let's kill it. As always, stock hours for life. Let's get it, boys. Have a great week.